Hello, everyone, and welcome back to the J22 Report. I am your host, Johnnie Market. You all know that drill. Hit that like button and subscribe if you already haven't. And just remember, to help grow and support this channel, I'm not trying to sell you anything. I'm not doing anything of that matter. All I ask is that you hit the like button and subscribe if you already haven't. And I'm not even asking for your time because if you're already here, it's certainly not because of marketing, because I don't have a marketing budget, and it's certainly not because someone's paying you to watch me. So I'm not even asking for your time because you're already here. So anyway, just let's do a little disclaimer. Nothing should be construed as financial advice. This is just my opinion and thoughts on the markets. As you know, I cannot guarantee performance. So let's get into today's just what caught my eye. Let's go to my screen, see what's so the market's been on a tear lately. Stock market, Dow Jones. I was talking about that 40,000 mark. You look at it, it's at that 40,000 mark here. S&P 5,500. It's gone up. It looks like more consolidation and whatnot. It's weird. The VIX is down, but so is the market. Look at that. VIX down 14.72. Gold had a nice day today. And I think that it's sort of consolidating to, if you look at it at GLD, 0.12. Let's see if Kiko actually has the actual price for today. Yeah, see, look at there. Spot's up. Spot is up $12.40. I hate the GLD. And silver's up 10 cents. So you can tell it's consolidating around that 2,400. It looks like to make its next move. And as you can see, someone actually thought that GLD is going to go up to 260. That would be, I'm not sure what the move is. I'm going to calculate that on one of my streams, but let's get into what's driving these markets. And you can tell just based on my analysis of economic data, said there'll be a correction or whatnot because they released the SPR. The data is going to look stronger, and it does look stronger now than it did a couple of months ago. The inflation will go lower. And as I said, Chicago Fed National Activity Index, that's up 0.05. It's been down for the longest of times. You look at existing home sales. Now, this is weak. Month over month, it's negative 5.4%. Richmond Fed manufacturing, but the services is up. So you look at this is mixed data. Activity is up, but the housing market, of course, housing, low sales, low volume, that's a precursor to lower prices. The press doesn't want to admit it, but it is. So as I said, it's still gold still consolidating, in my opinion. I think it's up for another upswing around 2,700 to 3,000 spot price. And then I think there will be real problems correcting. So another one I'm bullish on in a year or two is emerging markets. I think those will perform very well in 2030s, 2040s, and whatnot. But anyway, let's get rid of these. Let's get into a couple of articles. I had so many articles that let's get into this. Want more proof? Banks are coming. Warren Buffett cuts stake in Bank of America. Of course, he'll never like tell the public about something. Heaven forbid he do something to help out the public. Uh, Warren Buffett sold 34 million shares of Bank of America for $1.4 billion in multiple transactions. Of course, he has so much money, he's trying to sell without crashing. Still owns 998 million shares. Of course, he's not going to disclose, he's going to try to get rid of those. Carried out between July 17th and 19th. So as you can see, he's not done selling. He's not done getting out of the Bank of America. began investing in 2011. So I wonder what Bank of America. Let's just see. Of course, why is he a great investor? Because he's getting inside info that they're not going to let the banks. So let's just go like max. Let's see where it was. 2011. So if you look at it, it was around $6, $7, goes up to 42. Yeah, if I had inside info, I can make those returns. So yeah, inside info. It's easy to make those trades when you're already told what's going to happen. So anyway, there you go. Another precursor to the banking crisis. Let's get into the other thing about the U.S. economy, which shows things are really bad, and this is why the economic data long term is going to look worse. Not even the government will be able to pretend that we have a booming economy soon. Survey, this is bankrate.com, this is in Zero Hedge. More than 1 in 3 Americans earn money through side hustles. 32% think they'll always need them. That's also a sentiment indicator that most people do not believe one job is going to. If you spent your free time last year picking up jobs on gig apps, freelancing, and working a weekend job or developing a hobby, you're one of the Americans who've been hard at work on a side hustle. More than 1/3, 36% of US adults earn extra money beyond their main source of income through a side hustle. Yeah. Working side jobs, great way to explore passion. But yeah, here it is. It's also another way to pay their bills. Yeah, most of them, I would say about 90% of them are looking to pay their bills. More than 36% side hustles use side hustle to pay income on regular living expense like rent and groceries. And 32% think they'll need them to always make ends meet. Well, yeah. I mean, many Americans don't feel they can sustain their lifestyle on one income alone. Yeah. I mean, this is what's happening, one income alone. And this is really just, yeah, this shows that the economy is doing poorly. Nearly half of Gen Zers and millennials have a side hustle. So this is very telling because they do 1/3. If you look at it, half of Gen Z and millennials, 1/3 Americans. Gen X and baby boomers are over 50. So basically half of the young people, half of the people under 50 need a side hustle. So who's going to buy all these houses? Talking about the housing market, the stock market, they can't buy stocks. They can't buy equities. Who are the older generations gonna sell to if nearly half need a side hustle? And I bet you it's a lot more than that. Yeah, 1/3 of US adults have a side hustle. Nearly half of Gen Z and millennials. So basically half of the people under 50 need one. But when you count in the older population, it's only a third. And I mean, side hustles are popular with younger adults, nearly 48%. Highest among any generation. So yeah, baby boomers 23. It's just what I said. I didn't even need to scroll down. Look at that. So there you go. I mean, since I already translated this for you, I don't even since I already translated this, just shows how most Americans are new to side hustling. Yeah, because they're young and they grew up seeing the older generation not needing. So yeah. So I mean, yeah, we already got that done. We don't need that anymore. And if you want to know why uh this housing price has got it under control, it can all boil back down to the relief fund for the cookies 19 sickness. If fueled the spike in US home prices. PP loan fraud pushed US home prices to new research suggests. So pent up demand. Yeah, well, wait till they see pent up selling when rates lower. Growing demand for more among consumers for more space. There's all these things, but that's what it is. It's billion. But one other factor may be to blame: billions of dollars in stolen relief money from the PPP, according to a new study at the University of Texas. So yeah, it distributed about 780.4 billion, more than 10 million businesses. So it distributed about 780.4 billion to more than 10 million businesses. Look at that. Lost 20 billion in potential loan. Yeah, that all went to real estate. This was probably one of the worst policies ever, the PPP loans. They should make anyone who withdrew from it return it. And if not, seize their assets. I mean, this is just the damage this PP loan has done to structural and standards of living has just been. I ever became president Johnnie Market, if you took money from the PP, you have to return it in full or we seize your assets. That would be my official policy. You took money, you have to return it in full or we seize your. Also, house prices and zip codes with a high concentration of PPP loan fraud were 5.7% higher than those with low fraud. So there you go. It's what's driving this housing market fraud. So study controlled variables including land supply, prior house growth, population density, net migration, distance to central business sections. Gosh, wow, this is really. I don't think we need to look up. I mean, it's obvious if you look at this. So just want to do the news. There's another thing, and of course, June home sales slump, pointing to a buyer's market as supplies increases. It's only a matter of time as rates start trying out the money. So look at this. Sales of previously owned homes dropped 5.4% in June. Yeah, well, previously owned homes, as long as they're building and building and building, why buy a house when you can buy an old one? Inventory jumped 23.4% from a year ago to 1.32 million units at the end of June, coming off record lows, but still just 4.1 months. Well, yeah, then this is the beginning. Inventory is going to surge all over this country. You look at Asville, evictions are coming up. So as you can tell, median price of an existing home increase of 4.1%. So with inventory surging, and you can tell that we already went over this, but yeah, we're eventually going to see more and more because people can't afford it. And if you look at it, sales are still declining. Eventually, there's a lot of pent up selling. So this is going to take time to play out, though. So that's the other thing. Just like the stock market, it's going to take time to play out. So anyway, that's all I have for today. Hit that like button, subscribe if you haven't, and I will see you next video.